Welcome everybody. My name is Los and this is Los Trades. Welcome to another video where I trade everything Forex. I'm still working on that, so I don't know if I like it, but welcome nonetheless. Um, you know, Today we're gonna be talking about something I think that's really important. I mean, before you even place or execute a trade, I believe that this is something that you should do, and that is build a trading plan. But before we get into that, man, go ahead and subscribe to the channel, like this video, comment on it if you have any questions or concerns. Go follow my Instagram account. We'll start posting there consistently. And obviously, at the time of this video, there at the time of the I'm recording this video, there's no videos put out, but by the time of this video, there should be a bunch of other videos put out. I have a bunch just saved in my files. Just need to edit them. Anyways, let's get straight into it. Let's get straight into it. So trading plan is obviously a plan. If you're gonna go buy a car, you plan. If you're gonna go on vacation, you plan, right? So that when you're doing the action or whatever it is that you want to do, you know exactly what's going on. It's the exact same thing in trading, and I feel like this is just simple stuff like to understand, and some people charge money for to learn how to make a trading plan, really when it's really simple. So I'm gonna just show you guys my trading plan because I haven't updated in a very long time, and especially it's gonna help with me with my FTMO account process and just trading and just sticking to my plan. Right. So the first thing that I have here is my time to trade. Right. Time to trade is gonna be just what works best with you, right? And also the best volume times. So for those who you may not know, obviously we have the Asian session, which is sometimes low volatility, or most of the time low volatility. Sometimes it has a little bit of volume depending on the pair. We have London session, which is high volatility, and we have New York session, which is also high volatility, right? Depending on your work schedule or school schedule, whatever your schedule is, you have to really just choose three of those times to trade, right? Three of those times you just have to choose to trade. Personally, what works best with my schedule is pre-New York and New York session, which is 6:30 a.m. through 11:30 a.m. and Asian, right? 8 p.m. to 10 p.m. I usually just trade New York, right? Because I'm up and awake. I just tend to look at Asian because sometimes Asian moves happen and those moves carry out through London and then through New York. Basically, the start of the trend on some pairs happen on Asian and during the Asian session. So and also New York session. I mean, obviously you guys see this. This is 5 hours. I mean, I try to you know be attentive for 5 hours, but obviously, the human mind just does not work like that. So sometimes I just trade New York open at 8 a.m. through 11:30 a.m. or 10:30 a.m. It just really depends on the moves that you're looking for and the moves that you're waiting for. Sometimes those moves are gonna happen early, sometimes those moves are gonna happen later. So I mean, it really is just up to you. This is just the time allotted that I feel like I can catch really good moves because it's a high volume time. Right, so the next thing is understanding the pairs, right? So I'm pretty sure a lot of you guys haven't heard that you have to build a psychological relationship with a pair, right? It's like a girlfriend, you can't have a relationship if you don't know your girlfriend personally, if you don't know her favorite colors, all that stuff. So it's the same thing with these pairs. You have to understand what time these pairs move, how they react to news, how do they respect analysis, what type of analysis does it respect all that type of stuff, right? So personally for me, GBP, JPY, and gold, obviously they're not going to respect my analysis and they're not perfect in if it's way, but I've been able to watch this for a long time that I'm able to trade it and catch really good moves on it. So these are the two pairs that I chose, right? For you it might be different, it might be USD JPY or GBP USD or whatever it is, but just look at a pair. I suggest, for if you're a beginner, try to look at one pair, for a good half a year, maybe a year, and then move on to another pair, and then see how that works for you. But that's what I went through. I first started with GBP JPY and then I moved myself to gold. um because gold is a little bit more volatile. Both of these pairs are volatile, but personally, I've been able to manage it pretty well, in my opinion. Right. So risk management. Risk management is probably next to psychology the most important thing when it comes to trading, right? It's the most important thing because it's not about how much you make, it's about how less you lose, right? In this industry, in every other industry in the world, there's a cap to how much you can make, right? In this industry there isn't, right? If you're going to become a doctor, you make, whatever it is, 500,000 plus, 300,000 plus a year, right? But there's a cap. You don't make more than that unless obviously you go to other avenues of, bringing in income. But nonetheless, within the markets, you can make $1 million in 1 month, or you can make $2 million in the next month, or you can make $500,000 the next month, or you can make $1, you can make $5. It doesn't matter. There's no limit. However, what we can control, right, is how much we lose, right? I'm pretty sure you guys heard the term, keep losses small, keep wins even bigger, right? It's just common sense, really. So here's my risk management. I have goals here, right? Goals, weekly goals, monthly goals, and a daily goal. If you want to use this concept, it's kind of good to just keep yourself on track, maybe not to just overtrade. So for example, if I'm able to hit my daily goal, which honestly I would say I've upgraded from 0.5% to 1%, right? To 1%. So my daily goal is like 1%. Weekly goal, I would say, yeah, 2.5% weekly goal. That's not bad. And then monthly goal is 10%. All of these figures are based on the FTMO, standards, because obviously you have to make 10% in 1 month in order to be able to move to the next stage or whatnot. And then this just breaks down 2.5 times 4, which is 4 weeks in a month, is obviously equals to 10. And then 1%, it's just really your whatever you want it to be. But it kind of keeps you like in check or whatnot, so you don't overtrade or lose your profits that you already have, stuff like that, right? So if you want to use that, you can. My daily risk is max 2%. I feel like that's more than enough. If I'm being conservative, maybe 1%, but daily risk is max 2%. So the moment that I hit my daily risk, right, is it the moment that I just close all my charts, I close my MetaTrader, I get off the computer, and I come back to it the next day, right? I prep the night before or whatever the case is, but I come back to the next day. There's no more trades, right? And that's very important because you know taking 1 to 2 trades per day literally is gonna change your life. Like it literally changed mine. When my mentor Raja, he basically said, like try out just 1 to 2 trades for every 6 months, right? My stress levels decreased, my anxiety levels decreased. I was able to make more sound decisions. And in essence, when I went to go look at the trades that I took, I wasn't looking at 5 to 7 trades. I was looking at 1 to 2, maybe 3 trades, and I can understand, okay, what I did wrong, right? If you're taking 10 trades, your stress, your psychology is just it's all heavily impacted, right? And then when you go to look back at them, like there's so many traits to look at that you don't even know what you did wrong because you may have done plenty of things wrong within all of those trades, so you just don't know which to pick point and then which issue to work on one by one. Right, so taking 1 or 2 trades per day, I highly suggest that you guys implement this, for the next 6 months and try it out. If it changes for you and if it works for you, I'm telling you, it's evident that it's worked for a lot of people and it's worked for me. If not, then it is what it is, man. It's not a hard written rule. It's not a freaking what's it called, amendment. So take 1 to 2 trades per day, only 1 trade if daily goal is met. So obviously, if I make 1%, right? If I make 1% on the day, that's it. Why? Unless I want to try out some, unless I feel like unless I'm up in the week already, like more than 2.5%, I would say, that's when I would take another trade to see, how it would work out. But as far as just starting the week out, daily 1%. If I hit that 1%, okay, I'm done. That's it. Other moves can happen. That's perfectly fine. I was able to hit my jab. I was able to hit, what I'm saying? I was able to win in the markets. When where 90% of people fail, I was able to win. So that's the one way that I look at it, right? Only 2 trades if there's an opportunity to recover profits or it's absolutely imperative to take the setup. Basically what I just said. If it's like the setup is just way too good and you've seen that setup time and time after again and you want to take it, then go ahead, right? And then the other trade obviously is you know, to potentially recover profits. If we can't recover profits, it is what it is. All right, so lot size will primarily depend on the conditions of the setup, which is understandable, right? If you're comfortable with the setup, you're going to use your regular lot size. If you're not really comfortable with your setup and you're trying to start like, uh, you're trying to, what's it called? Discover a new concept or a new strategy, you always go half risk. At least that's what I suggest. Go half risk, so you won't lose your regular risk, right? So these were measures based on the $100,000 FTMO account. So if we use 20 lots, that's 1% of. Damn, I can't even type. If we use 20 lots, that's 1% of 200,000. Right, so $200 a pip for higher probability scenarios, and 10 lots, which is $100 a pip for lower probability scenarios and or high stop loss, right? So if I have a bigger stop loss than I want, for example, maybe a 20, 25 plus stop loss, I'm gonna go at half risk, because it's it would how would I say? For example, if I'm using 10 lots, right? Say 200,000, right? 200,000, right? Times 1%, right? 1% is 2,000, right? So let's say say I'm using a 10 lot, right? So I would usually, my normal risk would be a 20 lot, right? But say I'm using a 10 lot um, with a 20 pip stop, right? If we just do the math, 10 lot is $100 a pip, right? $100 a pip. So if I'm using a 20 pip stop loss, 20 times 100 equals 2,000. You see, so that would be, I would use that. I'm risking 1%, but I have a bigger, because I have a bigger stop loss, I'm using 10 lot instead of a 20 lot. If I was using a 20 pip stop loss, and say for an example, the trade would go against me, right? First of all, I would manage my risk to the point where I wouldn't lose all that money. But for example, somebody who may be a beginner, um, you know, and just lets their the trade hit their full stop loss. If I were to use a 20 pip stop loss on a 20 lot, that would be 4,000, and at that point, I would be losing 2% on the trade, right? And just hope that makes sense. So trade management, risk to reward is always going to be at a minimum of 1-to-1, subjective to each trader. And I put this here, subjective to each trader, because a lot of people really focus on risk to reward. A lot of swing traders and a lot of day traders and intraday traders really focus on that. But I've gotten moves where, I've gotten, for example, I've had a 20, or I would say 15 pip stop loss, right? And my trade would go for 10 pips, right? And then I would start to see that there's a high rejection, or was that, like something like that. Like sometimes it's just really subjective. It's really up to you. Um, I really don't focus on risk to reward, rather than just looking at ranges, looking at how price moves, and looking at where, if price breaks this range, where is the next place that price is going to go to, right? Stop loss amount will be targeted at 10 to 12 pips, 20 pips at most. I feel like this is a little too tight. I would say 25 to 30, especially since I'm trading gold. Gold moves a lot. Sometimes your stop losses are pretty big. So stop loss amount will be targeted at 10 to 12 pips for nice little, scalping setups, and 25 to 30 pips at most. Take profit amount will be placed at the next level of support or resistance, 10 pips at minimum, right? 10 pips at minimum. I would never take a trade in a range where in a range of 14 pips, right? Because you have to understand, there's spread. Whatever the case is, there's spread. So as soon as spread kicks in, that range comes to maybe a 12 or maybe a 10 pip range, and at that point, it's like there's not a lot of range for price to go to, and there may be a rejection, whatever the case may be. I'm just comfortable in taking trades in 15, 17 plus pip ranges, because I understand that, okay, we have room for this to continue going regardless of what my spread is, right? So, and it's just like how I said with the risk to reward, I don't really focus on risk to reward like that, right? Other than just finding the next level of support or resistance that price may go to, right? So this is my rules, right? These are my rules that I wrote down a really long time ago. When TP is hit at 10 pips, right, securing 50% of positions, stops at break even, and leaving the rest run when using a 10 lot, right? So we're going to change that. We're going to change that. First of all, we're using 20 lots now. Let me put this in bold, right? And we're going to put 80% of positions, stops at break even, and leaving the rest run when using a 20 lot. Yep, I like that. I like that a lot, because we're using a higher lot size, right? If we're using a higher lot size and we hit, minimum 10 pips, right? That's about $2,000, and secure that, be like $1,800, and then just leave 20% of the position to run, right? Because we're using a higher lot size, we want to make sure that we secure as much as we can, just in case price decides to come back, through our entry, or past our entry and go to our stops, or yeah, go to our stop loss. But that's why we're securing 80% stops at break even and leaving the restaurant when using a 20 lot. And I would say when using a 5 lot or 10 lot, I should say in this case, when using a 10 lot, let's build this up. Right, securing, I would say 50% of positions, right? Because if I'm using a 10 lot, right, I'm expected, just to see how it moves. I'm trying to test my confidence level with the current setup, or whatever the case is, and just securing 50%. I don't know. Because if I'm using the 10 lot and I hit 10 pips, that's $1,000. You know what? I'm going to put 80%. There's no need. Securing 80%, leaving the rest 20% to continue going. Right? So these are my conditions when I am in profit, right? So you see how, we've in the risk management, I guess, column, I guess you could say, we've gone over the goals that we want for the daily, for the weekly, and for the monthly, right? We've gone over our risk, the amount that we are comfortable risking per day, right? And the amount of trades that we are agreeing to take, right, with ourselves, with our psychology, right? And the conditions of taking those 1 to 2 trades per day, right? The lot sizes that we would use depending on our count size, right? Trade management, right? Where's the stop loss going to be put? Where's the TP going to be put? What's the risk to reward looking like? Whatever. What are the conditions when you're in profit, like, to secure positions, right? And now we're going to go a wall and drawdown. Like let's notice, let's see the conditions of while we're in drawdown. So here I wrote a long time ago, take 50% or full position if price goes in profit 5+ pips and comes back to entry, right? This one I'm gonna change, or I'm probably just gonna take off, because I've seen this a lot and I've got burned. I actually took, I think it was my previous or two FDMO accounts ago. Um, I was taking some sales on gold, and it did exactly that. Went 5+ pips in profit and came back to my entry. Did that about 3 times before I just closed it at break even, and then it continued going down. And that one trade could have passed me the challenge, right? So I feel like I'm gonna take this off, right? Let's see. Take 50% or full position if price quickly moves up and down, indicating an excessive amount of volume in the market, which could lead into a quick loss. Yeah, okay, this makes sense. Take 50%. Yeah, exactly. So there's times where, there's a lot of volatility in the market. There's news, or, some breaking news happens out of nowhere that's not like reported on Forex Factory. Um, this used to happen a lot during Brexit, back like 2 years ago, 3 years ago. And price would just move like it would just move up and down, And when price is moving like that, I've learned to just really just stay away from the markets, right? Because, yeah, it's moving a lot, and you might think it just may shoot up and whatnot, and it might, but it also has the ability to come down just as quick, right? And as traders, like I said, we're controlling the amount that we lose, right? And in those conditions, there's many times where stop losses have been, uh, what's it called, slipped, right? So if you have a 20 pip stop loss and there's some breaking news that happens, and price just straight goes through your stop loss, right? There's a possibility that you could lose 80 pips when your stop loss was set at 20 pips. It's just something that we cannot avoid. It happens all the time. So I just like to stay away from the markets during that, or what if I'm in a trade and something happens and it's starting to move like that, I just take 50%, right? Wherever I'm at, I take 50% to lower my stress, to understand, like, okay, like, I'm not in control of this right now. So the only way I can become in control of this is if I lower my risk. So I'm gonna leave that there. Take 50% or full position if confidence in the trade is dwindling. It's the same exact thing. It's the exact thing. If you feel like, you know, for example, for me, when I usually take a trade, if the trade does not start to move within 5 to 7 minutes of my entry, that's when my confidence starts to dwindle, because most of the trades that I take, most of the winning trades at least, once they give me all the confluence that I need, it moves quickly, right? It moves quickly, within 5 to 7 minutes, it's already moving. I'm 5 pips in profit, you know what I'm saying? But if we're stuck like around, and draw down a little bit, or, coming back and forth to entry, that's when um that's when my confidence starts dwindling. So, take 50% and just let the rest run and see if your analysis played out the way that you liked it, or if not, and then just, journal it, back test it. So yeah, I'm also gonna add some new things, right? So I'm gonna put take 50% if the candle, if the trading candle breaks its own high, right? Breaks its own high or low against what can I call it? Take 50% of the trading candle breaks its own high or low against you, right? Against you. For example, if you're taking a sell and your trading candle proceeds to flip bullish, close 50%. Take 50% of the trading candle. Yeah. Okay, so these are like two separate ones that I want to do. All right. Yeah. Let me copy this, delete this, make a new one. Take 50% if the trading candle starts to form in the opposite. How can I word this? In the opposite direction of bias, right? Okay, so take 50% if the trading candle breaks its own high or low against you, obviously, right? Take 50% if the trading candle starts to form in the opposite direction of bias, right? So that's like, for example, let's see what we could do here. Let's take our rectangles. Are they skinny? Yeah, they are skinny. Right, so for example, let's see, right, we have a support right here, right? We have a support, and we have, let's make this red. All right, we have this candle forming like this, broke below the support, right? Broke below the support. There we go. There we go. Right, so we broke below support. We have clean range to the left hand side. Just imagine we have clean range to the left hand side all the way down to, I would say, this level right here, right? So it's expected for us, at least according to my strategy, right? So if this next candle, right, if this next candle does, breaks the low of the previous candle, right, since we closed below support, right, it's expected for it to continue going down to this next support, right? But what I'm trying to say around here is like take 50% of the trading candle breaks its own higher against you, right? So we have a stop loss. Let's say a conservative stop loss would be like right above here, right? Right above here, right? That's our stop loss. And let's say our take profit is obviously right here, right? So if this candle, right, let's make it red. If this candle does something like this, right, it comes down, breaks the low, right? So it makes the top wick first. Bear with me. It makes the top wick first, and then starts to break the low, right? That's still trying to learn how to use this. Right? It breaks the low, right? The moment that, okay, so like I said, take 50% of the trading candle breaks its own high or low against you, right? So I'm taking a sell, right? I'm taking a sell right here, right? I am taking a sell. Sorry, I'm trying to freaking take it. Yeah, take 50% of the trading candle starts to form in the opposite direction of bias. Okay, so let's just draw this, man. Let's just, right? Let's just say it like this. And then, yeah. Okay, so take 50% if the trading candle breaks its own high or low against you, right? So obviously I'm taking a sell. The moment that this candle, right, starts to break its high right here and starts to trade back in the range, right, and it starts to trade back in the range, this is giving us this indication that the probability for price to go down is obviously not there because, if we made a top wick, broke the low, right, and went in a couple of pips in profit, but now it's coming back and breaking the high, back into this range after we already broke it. That's giving us, it's giving us some signs of like, okay, we might come back into this range. This move might have been a fake out, or this is just a very strong level of support or whatever high time frames we look at higher times, whatever the case is. If we're in this trade and it starts to break its high, we have to cut 50% off, right? Because it already broke the low, now it's breaking its own high, right? And also take 50% if the trading candle starts to form in the opposite direction of bias, right? Is basically the exact same thing as, like, these two kind of go hand in hand, right? So if obviously the candle opened right here, somewhere right here, right? The candle opened right here. So if price goes down, right? If price goes down and then it starts to form bullish, right? This one is the first one, right? So this one is the first one, and then this one is the second one, right? If it starts to form bullish after already closing and breaking below and giving you some profit, it starts to flip bullish, right? Flip bullish from a bearish candle, right? We're gonna cut 50% off. And then the moment that it breaks its own high, we're gonna cut another 50% off, right? And then we're gonna let the rest run, right? Because at that point we've cut, pretty much a lot of risk down, and we're just gonna let the rest run. If it breaks our stop loss, if it hits our stop loss, okay, we've managed our risk, right? So I hope that you guys understood that. Like, it's vice versa is the exact same thing with bullish. So I mean, we could give an example now that I know exactly what I'm talking about. And yeah, all right. So for example, we have let's say resistance, right? We have a resistance right here, right? We have another resistance up here. Our TP is obviously going to be put at this resistance, right? And then let's draw our candle, right? So we have, let's say, a blue candle, right? We have a blue candle closing above here, right? It has this, obviously it has this bottom wick, and obviously we have the top wick, right? So obviously understanding all of these, let's move that because yeah, we'll open right here, exactly, right? Right, so it's the exact same concept, right? Our stop loss would be somewhere either below this candle right here or below this candle right here, like somewhere right here. Let's say it's just below this candle. All right, let's take our pen, right? We're gonna use black. Right, so like I said, this one goes first, this one goes second. So take 50% if the trading candle starts to form in the opposite direction of bias, right? So if price continues to go up, break in the high, right, and then it already formed bullish, you're already a bunch of pips in profit, right? Not a bunch of pips, but like maybe like 2 to 3 at most, for example, right? And price just comes back to where it opened. This candle comes back to where it's open and starting to form bearish, right? That's the moment that we take 50% because it was like, okay, we're probably just making a top wick, or like I said, this might be a fake out, whatever the case may be. And we're gonna, reduce our risk now, right? Because at this point, right, your entry would have been right here, or at least my entry would have been right here as it broke the high, right? So at the moment that it comes back to where the candle opened, we're already past our entry, so we're gonna draw down, right? And sometimes it does that, sometimes it doesn't, right? But if it starts to, the bear starts to go bearish instead of bullish, right? And it starts to continue bearish or whatnot, I'm gonna take 50% off, right? And then if it starts to break its own low, right? Knowing that my stop loss is here, I'm gonna take 50% off again, right? So I hope that, I hope that I explained that pretty well. Um, but those are just my parameters as far as what I've seen happen, because there was a trade that I took, um, where was it? Yeah, there was a trade that I took this week that I didn't let, yeah. So for example, this is the trade right here, right? This is the trade, as you guys can see, right? My entry is right with this red arrow as it broke the previous low, right? My stop loss is this little red arrow, and then my TP was down here, right? However, I entered, right, and I started to notice, okay, like we're gonna go up, so I took some partials right here, right, and then, we had support right here. All right, we had a support right here, and you guys can see that my stop loss was above this range, above the support, right? So honestly, I could have handled this a little better. I could have just, because obviously it never came to my stop loss, right? And once I set my stop loss, I'm already agreeing to, risk that amount, right? So it never came, and then nowhere close to my stop loss. Then I closed full position right here, and as you guys can see, price, obviously before this candle, bullish candle closed bullish, it continued going down for a good, 17 pips, which was a pretty good trade, But I couldn't, even if I closed 50% twice, right? Even if I closed 50% twice, I could have let the small position to continue running, and then to me that makes me understand, okay, my bias was correct, right? Maybe I just entered a little bit too early, maybe my timing was off, right? But I would have never, I can't have those realizations if I don't have any position running, understand? So even if I close 50% twice, and I leave a very small percentage to run, and it, goes in my favor, then I'm able to learn from that, right? So let's go back here. All right, so confluences, these are just confluences based on what you want to see, is based on your strategy. This is the confluences that I have on my strategy, right? At all times, there should be a very minimum of 3 confluences. I believe 3 confluences is the bare minimum. I would say go to four or five at least, but 3 confluences have been enough for me many times, so I'm just gonna leave it like that. So market structure, obviously bearish or bullish. This should be the first thing that you should notice, right? What's the market doing? Higher time frame to lower time frames confluence, right? So understand what's happening in the higher time frames, right? And then go down to the lower time frames and make it make sense for you, right? If you can't make it make sense for you, then there's a problem there. Support and resistance zones, understanding where your ranges are, understanding where your supports are, rejection levels, supply levels, demand levels, whatever the case may be. You have to really understand these, because I mean, even though their concept might be simple, if you draw a wrong zone, you can miss out on trade, or you can lose a trade if you do, so keep an eye out for that. Candle breaking the high of the previous candle on any time frame. Um, it's just like how I explained to you. This works on any time frame. 4 hour time frame, daily time frame, weekly, monthly, 5 minute, 1 minute. It works on every time frame. Candle breaking the low of the previous candle on any time frame is the same thing, just vice versa of each other. Expected volumes to come in during the session. So obviously, like we talked about, New York session, and Asian session, or I would say London session, have really high volume times, right? And volume tends to respect analysis. So we love that. Price ranges to trade in, just like I said, the if you need to have a good range to trade in, right? Clean range to the left hand side, no support. Obviously, if you're taking buys, you want to understand what your next resistance is, right? So that you could place your TP there, because support and resistance zones are like magnets, right? Price just gravitates towards them. Like I said just now, clean traffic to the left, and the closing of a candle in all time frames, right? It's important, very, very important for us to wait for candle closes, right? Because let me just show you an example. Let me just show you an example. All right, look at this example right here that just happened this past week. All right, we have this resistance right here. Let's take our reject. Oh, snap! It is. We rejected it once, two, three, four, five, six. Right? So based on my strategy, I would tell myself, okay, well, we're breaking the highs right over here, right? We're breaking all these highs, so it's good to take a buy, right? maybe yeah, this is on the 4 hour, but like I said, it works on every time frame, right? However, you could have caught this move, but as far as holding it, maybe to like right here, or maybe to like right here, you know, the candle never closed above this resistance, right? Never closed above this resistance. So a lot of people might have gotten burned on this move, right? If we're looking on the 4 hour, it's the same thing if we might look at on the 30 minute. It's just the same thing, really. So you just really have to watch out for that. Wait for candles to close, to give you more confirmation, right? Pointers that I have is just stuff that I've realized over time. Um, just like little tips and stuff like that. So your bias is oftentimes correct. It's just your timing and patience that needs to improve, right? Timing and patience really is, like I said, other two huge factors that um, kind of involve your psychology a little bit. Like for example, I made like I explained right here, right? Maybe my timing, right, was a little bit early, right? Maybe price needs to continue going up a little bit before coming down, right? And patience, obviously, patience pays in this industry. Patience pays. Wait for candles to close, wait for the session, wait for volume time. Wait, just wait until you see the um the move that you want to see happen and just take it. Right? So not all trades are going to hit 10 pips within a short period of time. Trust your analysis until the market shows you otherwise. So I think I wrote this because, right, GPGPY and gold are very different in the essence of that gold moves really quick. You could get 10 pips on gold in literally 5 seconds. With GPGPY, it could take 20 minutes, it could take 30 minutes. Like sometimes it just depends, really. Um, so I was kind of having trouble with that because I would like be taking a trade on GBPJPY after taking a trade the previous day before on gold, and it would it would take forever, and then I would just get impatient, right? And patience, like I said, is a very big factor, right? Unless there's a range of more than 15 pips, do not trade until price is broken either below or above your red line, or I would say support or resistance, basically resistance. Like I said earlier, I only like to trade in ranges of more than 15 pips just due to rejection zones and spread and all that good stuff. Um, you have two attempts on entering the trade: the impulse or the retracement, right? So impulse entries are a little bit more risky and there's a little bit more to explain. So I'm not gonna explain it in this video because this video is already long enough. But the retracements is like we always talked about. I mean, I've talked about this in multiple videos now. Right, retracements are essentially a pullback. All right, pullback. Boom. Right, so if we broke resistance right here, came back, broke it. Now we have the pullback. The perfect entry is right here to continue going up. Right? Wait for candles to close. I literally just said that. Just wait for candles to close. If the candle breaks the lower, the high of the previous candle in the first half, it can be pretty risky to enter. And these are all time frames. This is also something that I'm going to explain in another video. And stay confident in your own analysis. Stay confident in your own analysis. There's a lot of people who trade differently. Not everybody trades the same. They might see something that you don't, or you might see something that they don't. I got stuck a lot, when I first started trading, and you know, having my own analysis and then looking at other people's analysis. For example, if my analysis was buy and somebody in like the community that I was in said, "Oh, I'm looking for sales," right? My bias would be misconstrued, I guess is the right word. Um, and I would think, oh man, like this guy's looking for sales, but why am I looking for buys? So, um, and then in the end, my bullish bias worked out in my favor. So it's like you have to be confident. And the confidence is a trait that I truly struggle with, even to this day. But I've gotten over, a lot of it. I'm still battling, but stay confident in your own analysis, and just do you, man. Like honestly, just believe it. Believe in the time that you've spent, the money that you spent, in learning forex and all the things that you've learned, and just believe in yourself. Right. At the end of the day, the worst that can happen is that you learn. Right. That's the worst that can happen. right? But anyways, this is what it takes, I believe, to make a nice sound trading plan, depending obviously on your account size, your risk parameters, and all that stuff. So if you guys want to go and just like, copy this, or not necessarily copy it step by step, but put it depending on your trading plan, like I said, your parameters, and make it unique, make it yours, right? This is just mine. Over time, I'll add more pointers and whatnot, and if I do change it, I'll let you guys know. But as far as this video goes, it's a little bit long, but I feel like it's very essential to explain each and everything, especially if you're a beginner. um, if you guys found value out of this video, like I said, subscribe to the channel, like the video, comment if you have any questions or concerns, go follow my Instagram account. You could DM me on there as well, and I'll get back to you. This is Los and Los Trades. I'll see you guys on the next one.